Today we're sitting down with Isaac Matthews. He's one of our investors that we've had a relationship with for a few years, and just talking about his background and how his experience has been investing with Rust Belt Capital. Well, Isaac, thanks for joining us. Thanks for doing this conversation with us. Really, we wanted to bring in somebody who's done a lot of investments with us, somebody that we know, like, and trust, obviously, since you've done the investments with us, and let other potential investors hear who you are, hear your story, your background, both personal and career, how you met us, and then why you decide to invest with us and how it's gone investing with us. So definitely appreciate you willing to sit in and do this with us. Can you start off by telling us a little bit, give us a little bit of a background on who you are and the line of work and the profession that you were in?
So my background, I started out in operations. I went to school for operations management at Ohio State, and was in everything from purchasing to production planning, things of that nature. And then had some operational experience, had some experience in manufacturing, and then actually went into, for a while, into a company that processed food. And so those experiences kind of led me to an opportunity in a company that had more of a commodity ingredient food, and it just kind of fit well with that experience. And the operational part was good when I moved into that role, because a lot of it was customer facing. And if you're in there just trying to sell something that they don't need, you're not going to get the uptake as much as if you're actually solving a problem for them.
You're right. Yeah.
So you understand their business. You say, what are your constraints? How do I solve this for you? And then you can kind of bring that. And then with that comes the ingredient supply. And basically, we like to think of it as the last mile, so to speak. If you're looking for a customer in that fashion, you're going to want to finish that mile for them to get the product directly to them in the form they need it, in the size, weight, whatever quality spec they need. So it was in pet food manufacturing is where the customers we served.
Yeah.
So we would supply commodities.
Did you going to university, did you ever think that would be a job that you would get into doing, or wasn't sure?
No, I didn't even really know the job existed. But it's interesting how life takes you along its journey, because my dad was a veterinarian, so I had some experience in that. And then, I worked in operations and then in food, and then here you tie it all together. And so, interesting.
And then, so you moved from, originally you started out in operations, saw how everything was done, and then you moved into more of a trading role eventually, or can you give us some insight onto that?
Yeah, the ingredient supply was, it's a supply chain solution, bringing them whatever they need from wherever they need, the ingredient, the blend, and that obviously involved commodities of sorts. So you're managing supply chains and agricultural risk and handling product, storing product, distributing product. So it was kind of a hybrid of sales and marketing, but also supply chain management.
Just sourcing products that people would need or manufacturers would need, finding the manufacturers, managing those relationships, and then managing obviously the price risk or the money risk on, okay, I'm sourcing this good at a certain price. I need to know what we're selling it for and stuff like that. Maybe explain that a little bit.
Yeah, within that supply chain, there's a tremendous amount of risk. You've got oftentimes geopolitical risk, currency risk if you're going international, freight risk. You've got storage and inventory shrink. You've got just the time and cost of money and inventory, and how much do you need and how do you hedge that? And if you are the supply chain, you can't outrun the customer out. So you got to balance all those things and be able to manage them to meet the customer's needs, but also obviously to make money.
Looks like there's a crazy amount of moving pieces. You got time, quality, form that you're trying to manage, and then make a profit at the end of the day for the company that you're working for as well. How do you even begin to think about that? I remember a time when you told me about this big, I think it was sweet potatoes or something like this, giant boat that you guys were getting, a container or freight boat, bulk vessel maybe. I'm just thinking about that, and it's like, okay, how do I figure out what the price I'm buying it for at the source versus the price we're selling it there, the risk in between, how long we have it, like, you explain or talk about that maybe a little bit.
Yeah, I think in the business, one of the things you had to do was constantly reinvent yourself because there was competition, and anywhere there's profits being made, you've got competition,
Yeah.
and so you had to look at the business and understand what are my risks and which ones can I hedge against and which ones am I just going to have to, be able to handle. And I think you guys are familiar. The biggest risk you have is the one you don't know.
Yep. Sure.
If you don't know you've got a risk, that's the bad risk because it's a surprise. It's the one, we've all had those. Hopefully they're not catastrophic. But if you know the risk, you get comfortable with, okay, I'm 75% sure this is going to be successful. These are the things I can nail down. And the other 25% is where you make or you lose or you break even. I mean, you don't want to go down to the wire every time, but you have to consider your experience and background. And the key piece to all of that is the relationship side, the relationship with the customer, with the supplier, that if you do get in that spot, or they do, you're going to work with them. You're going to say, hey, we're not in this is not transactional. This is a long-term relationship. And we need to navigate through this challenging stretch here, whatever it might be. And when things are good, it was interesting because a lot of people that trade commodities were black and white. Like, I made a buck, I'm on my way. We would actually look at that a little differently. If we made an extra buck, we might go back and share that with the supplier or the customer, which was, looking at it as a long-term relationship where, hey, you take the good, you take the bad, and we're going to work through it, and we're going to share in the success.
That's crazy. You don't hear a lot of people talking about sharing some of the profits that they made with the other party on that transaction. How'd that actually play out with the relationships? I'm sure they gave you a greater degree of loyalty then, because, hey, these people are actually, here to work with us and not just here
for the long haul. That yes sends a great message. It would seem that they did. So is it part of the not to interrupt you, Steve, but is that part of the known plan for your company, or was that just kind of off the cuff started happening? How'd that develop? Yeah.
It was more on an exception basis, and it was definitely not within the culture of the company that, it would be if you made the profit, you put it in your pocket.
Sure.
Which is understandable in a business because when you lost money, you were exposed to that. So, that was part of the risk you took. But in our business, we'd look at it a lot more of a longer term relationship. So, for example, if you're supplying a customer, I remember when supplying them lentils, and let's say the market falls out of lentils and you could pick up a few rail cars at a lower cost.
Sure.
You could transact that and send it into the customer, or you could let them know, hey, there's an opportunity here. We can get a few rail cars in at a lower cost versus the market. You guys interested? We want to pass that along to you. And so, those 2 or 3 cars was a small percent of the total, but the message it sent was pretty great.
That's, yeah.
Yeah,
Excellent.
definitely managing those relationships. There's something that you said, especially pertaining to commodities, since commodities are indifferentiable goods or whatever. When there's a profit, there's going to be a lot of competition. So your relationships are very important in order to be sustainable and continued long term. Something that we've seen in the multifamily space, especially in the last couple of years, is multifamily has been probably since 2022 or even so before that, maybe 2019, it's been incredibly profitable to be an owner, an operator, as long as you're a good owner, a good operator in multifamily. And so we've just seen so many people come into the space and so much money, more so than people, I would say, competing for the same deals that we're going after. And even so right now, today, we're seeing there's a low amount of opportunities on the market, and the opportunities that we do see on the market are getting priced at rates that just it doesn't make sense for the amount of risk that we're taking relative to the return. And so the deals that we're getting done are typically through relationships that we've built over several years. Like the last Cedar Run deal that we did, that was a relationship-based deal, not so much a pricing market. We're just going to pay the most. And then we've been beat out on a couple deals more recently because we're not going to overpay for a property. But it's interesting that crossover, that just exists in business, I guess.
Yeah. And I think some people think of a relationship as, hey, I took him to a ball game. But I think a relationship has to be deeper than that. It's got to be based on trust. Sure. Do I trust this guy? Do I trust this person? That you know, they're essentially you're trusting them your money, and you're trusting them to act in your best interest. And so when you have that, that really helps build a long-term business model.
Yeah, you're absolutely right there, because that was, you hit the nail on the head. It is deeper than that. The relationship Steve was referring to, it wasn't just, you greased the wheels somewhere where you went to the ball game or out to lunch or something like that. It's somebody that we've actually worked with before. They know that it's the trust that we're going to do what we say we're going to do. We're going to get that thing across the finish line if we commit to it, and that's exactly what it was. That's right.
Well, I think you guys have been very transparent. When you have problems, you share that. Hey, we got a lot of snow this winter, and it didn't work out as we planned. We got hit in the side of the head with a snow bill that we didn't expect. Sure. But it's not like you swept it under the rug. And that transparency, I'd much rather have that than you find out later, hey, dividends don't look very good. What happened? Well, if you tell people up front, you tell them the truth, that's what's going to build trust.
Yeah.
So coming from your career, risk is something that's involved in any type of investment, any type of trade, any type of business. What's your view or philosophy on viewing risk? How do you view it? How do you understand it, wrap your head around it, and know when I should take a risk versus when I shouldn't take a risk?
I would say, we used to say we eat risk for breakfast. That's what we did. We come in, we eat risk for breakfast. And it was funny because some of the guys in the company would say, like, hey, we're going to the casino. And they'd say, I'm not going to the casino. My day job is at the casino. I don't want more. I did go, but that's just me. But I think that when you look at risk, it's like I said earlier, it's really about known and unknowns. And it's getting comfortable with that. And there are those that are risk averse, and that's okay. And there are those that are not. And then there's the blind fools that don't know what they don't know. And I think that you have to decide kind of for yourself what level of risk are you comfortable with. It's kind of like in your financial portfolio. Do you want it all in the market?
Right.
Do you want half in the market? Because there's going to be ebbs and flows with all that. And the return based on how much risk you take there's upside and downside. Mm-hmm. For me, when I look at what you guys have been doing, I think, my expectation is that you're going to get to a point where you've got to make a decision or you miss the opportunity. Mm-hmm. The analysis paralysis. If you wait till you're 95%, hey, this is a winner, we're going to make money, you missed it. It's gone. It's gone. You've got to be to a point that, maybe it's 70%. Mm-hmm. I think this is worth the risk. And know what we think are the unknowns. Let's do it. So to me, if you never have a failed project, which you guys haven't, but if you never had a failed project, you probably didn't take enough risk.
Yeah.
You need to have, it's just like a trade or any business, if you've never failed, then you probably didn't maximize your return. You might be able to sleep at night, and some people prefer that. For me, I'd rather have, 9 deals, 1 went bad, and you've got a better return overall.
Yeah.
And you learn probably from that mistake. You might learn more than all the other 9.
Right.
Why did it go wrong? Was it something we knew, didn't know? Something went sideways? We forgot about this? The guy didn't tell us everything we needed to know?
I think known and unknown, that's why we used long-term fixed rate debt on every deal. And there's a lot of people who, especially in the South right now in multifamily, they use floating rates or using rate caps and stuff like that. And they did not ever anticipate interest rates rocketing higher. And then,
Here we are.
They're busted now. Mm-hmm. You got to go get pref equity. You got to go get rescue debt. The deal's underwater, possibly going into receivership, or you got to sell the property if you can sell the property, which, the early movers on that one are going to be the ones that are better off than the late ones that don't make that decision. So those decisions never go away, I guess. Analyzing risk on a deal all the time. Once you own it, you're still analyzing every day.
And I think that's exactly right, because it's just like in commodity trading. You can't come in with yesterday's assumptions. Every day you need to come in and re-ask those key questions. Why yesterday was that true, and why isn't it true today? Because the market moves, things change. Interest rates go up, they go down, housing markets move, and so knowing where the opportunities lie, and if you think an opportunity is going to be good forever, then it's not.
That's right.
And one that wasn't yesterday might be tomorrow.
Yeah, you can't just, and I think we have a good view on this, you can't just buy a property, set it, and forget it as an operator. As the investor, you can, as long as you know that your operator is looking at it and reassessing literally every day. Where are we at? Where are rent collections at? How much bad debt do we have, or late collected rents do we have? Where are rates going? What's our maintenance look like? What's labor costs? So on and so forth. So when we put a deal in front of you, staying on the risk topic, what do you like about how we view risks, or what we express about the risks that we see with a property, or kind of cover that area when we're showing you a new deal?
Yeah, what I like to do is I'll take what you put together, I'll look it over. Usually we'll have a discussion about, hey, I might have some questions. I think it over. I look at how much you're looking to fund. I put a lot of trust in you guys. I mean, I do. I mean, the first one I probably scrutinize more than the last one, but I still look at it. I even share it with my financial advisor. I have them look at it, and they may have a few questions that I didn't think of. And the thing I appreciate is that I can ask those candidly, and there's no, resistance. It's like, hey, great question, or no, we didn't think about that, or yes, we did think about that. So I think of the investment as you guys are driving the bus, but it's collaborative. You ask, you value what I think or ask, and take it into consideration. So that's probably what gets me the most comfortable. Is there's a track record, I trust you, and it's collaborative.
Sure. Well, then that really helps on our end. We have some good investors like yourself that ask good questions. And if you're asking that question, well, we should address that because someone else is going to have it. Or why haven't we asked that question? If we don't have an answer to it, that helps. It just helps refine everything as we move forward and learn. Every deal we do is something to be learned, right?
Yeah.
That's it's appreciated on your end too. So.
And you guys have probably forgot more than I know about real estate. So I'm not an expert in real estate at all. I know a little bit about business. I know a little bit about, this and that and the other. So to me, it's your expertise makes me comfortable. But sometimes my ignorant question is one that you didn't think of because, you don't
Through it, so know to think about it, or you forget about it. Yeah. And even there, that's a good point to hit on. We know multifamily real estate very, very well. I mean, people like to group real estate all together, but real estate's very diverse and spread out, right? So we stick on multifamily because we know it so well. We don't go look at strip malls. We don't go look at office. We don't go look at, residential homes, because those are all different, and the very nuances can make or break you, especially in a competitive market like we are. And even then, on multifamily, we don't do affordable housing, Section 8 type stuff. Is it profitable? Sure, but we don't do that. We're not experts in that. We don't do Class A luxury. Is it profitable? Sometimes not. We don't do that. We're workforce housing because we know the tenant demographic. We know how it operates, what to expect. And
well, it's a business strategy, and I think similar to myself is you're an expert in a niche market. Now, it's a big niche market, but you're an expert in that subject area, and so have deep knowledge of that particular part and kind of business, and that's an advantage. There's nothing wrong with having this much knowledge over a wide breadth of businesses, but if you're deep in one area, it can be a real interesting play.
Yeah, for sure. I think something that some people would be interested to hear about is the first deal that you ever did with us. How did it happen? We brought it to you. What did that look like? And how has it, turned out so far?
I think it was Lamplight.
Yeah.
Right? So first of all, when you said Lamplight, I thought we were buying Lamplight Cafe. And I thought, I do like a good steak and eggs. but unfortunately both, it was actual multifamily unit. And so for me, I hadn't done this before, and I had no experience in it, but I had an interest in getting more of a presence, a physical presence, so to speak, in real estate, because I've got other investments, and there's, your portfolios that have real estate in them, so you're exposed to that market. But to me, I wanted to have some diversification of actual investment in that area. And so when you and I talked, the first thing I said is, well, I want to see it. I want to go look at it. I want to walk the property. I want to, see where my money's going. And so that was really helpful. And I think the snow was flying, and it was pretty chilly that day. But it was a great experience just to kind of go there and see the physical side of what the opportunity was. And so that I thought, okay, well, this sounds interesting. And then had some more questions and follow up, and you guys had some more things. And knowing your background and knowing, this is our first play, that gave me a pretty high level of confidence after meeting with you guys that, it was going to be something, you weren't going to swing for the fences. You were looking for a good, solid single,
Right.
To get on base, and away we went.
Yeah. So far, that property's good down.
Yeah.
Perfect so far. Yeah.
Just looked at that the other day. What do we start out at? 28 a month on the rents.
Top line revenue is $28,000 a month.
Is that right?
It's
44.
$44,000 a month. So that's,
Not bad.
and we've got quite a bit of room left to run on that one. So hopefully it continues
Yep.
tracking higher.
But I think for me also, it was the level of activity that you guys had. You guys weren't, hey, we're going to buy it and flip it.
Right.
You looked at it and said, we're going to buy it, and we're going to optimize. And that's, for me, that was very familiar, because that's how you differentiate. If you just go in and you transact, you can maybe make some money, but you're not going to make what you could make if you optimize. And by optimizing, you have to be a subject matter expert. You got to be willing to get your hands dirty. You have to go in there and run it like it's your own place. Right. And to me, we were just laughing earlier about putting insulation in yourself and doing air conditioner upgrades and things like that, and looking at how things were done in the past and asking why before you jump, but then saying, I got a better mousetrap. So that's where that was also very intriguing to me, is you were going to run it like your own business, which it was, and you were going to optimize, and you weren't going to waste. You weren't going to make, cheap decisions, but you just weren't going to spend money like it had been done in the past.
Right. It's different when you have we're going to own this for a long period of time view. You're going to put money into a property that you otherwise wouldn't if you were just trying to, flip it off to the next guy and so on and so forth. And that's different about how we operate. We buy to hold for a long period of time versus just trade. Is that something that was appealing to you, that our intention was to hold on to this for a long period of time and turn it into basically a cash generating ATM?
Yeah, I think for me that was that's not the word I used, but yeah, I think that I looked at it and said this is a long-term investment. It was to me not something that I needed to it didn't need to be liquid. So that's something you have to consider. It's certainly not something that you can go, hey, I want to cash out tomorrow. You can, but it's not the approach you have.
Right.
To me, when I heard some of the things you're doing to your real estate, I realized this is definitely long term. You're putting new pavement in, you're putting new roofing, things like that. Those are not, hey, we're going to flip this next year.
Right.
But we're going to do this and add to the value of the asset long term.
Yeah.
And the tenants you can attract, and you're upgrading, you're improving. So all those factors are long term.
Yeah. So far, you've invested in all the deals that we have done. Can you speak to a little bit how that has been in terms of getting your returns, your satisfaction or not satisfaction with the returns?
Here's what I would say to answer that question. I think it's kind of diversity within diversity, because I wanted to get into some other hands-on, get your hands dirty investments. And so within your business, you've got multi-facilities, and each one is unique in and of itself. Maybe a little more risk, maybe a little more return, Maybe it's a long-term play, maybe it's a short-term play. And I mean within a range. It's not like they're wildly different, but I kind of intrigued by that to say, I like what these guys have done with Project One. I want to be in all your projects. I want to get a little bit of the action on them. And quite honestly, I enjoy it. I think that the communication is top notch. The monthly updates, quarterly updates, sometimes it's a video, sometimes it's a write-up. I like to know the details. And that's just me. Some people would rather say, here's my investment, send me a check. And that's okay. You need that. You don't want to have a bunch of high maintenance investors. Not that I'm one, but I think that what I like the most is I feel like I'm actually a part of it as much as I want to be. You don't call me when the toilet's back up, which I don't want that phone call, but you keep me posted. What's going on? The good, the bad, the ugly, how things look so far, and maybe a little bit of a kind of I would say it's almost like an earnings call.
Sure.
Say, hey, this is what we see based on what we think is going to happen. Market looks this, market looks that. We got a couple more expenses coming down. We think we're going to need this. It's very informative. And so it kind of gives me a sense that I know what's going on, as much of the information as I want to have.
Right.
And it's, it's an investment. I like to know that.
Yeah. Checks in the mail is always good, right?
And I love the checks. I'm a check guy. Some people like the electronic deposit, but I get a check signed by the God Almighty.
Oh my word. No. So, we can pivot here a little bit more. You are making a transition, or have made a transition, away from the 9 to 5, and into, I wouldn't call it retirement, because I don't think Isaac retires. He just
right.
readjusts.
Is that like Legends Never Die?
Something like
Yeah.
that.
Okay.
Talking you up right now.
All right.
Yeah.
You're going to keep busy. Right, yeah.
No,
Busy.
I do. I like to keep busy. But I'd say, well, go ahead. What's your question?
Yeah. So what's your plans now that you've moved away from the 9 to 5 and you've got, other stuff that you're pursuing now outside 9 to 5?
I would say for the foreseeable future is just no long-term commitments as far as like jumping into another job or something like that. I was fortunate to be able to kind of have a soft landing with my job. So kind of for the last 6 months, I was part-time, kind of eased out of it. So it was good. I don't have necessarily a plan, but I would say for me, the most important thing is I've been able to spend more time with my family, which is very important to me. Mm-hmm. And so there's been needs and whatnot in that front that have been, I think there's an old saying that says, man plans, God laughs. Right.
Yeah.
So, and I think it's true. I mean, you kind of go with the flow, but there's a few different things I've done. I mean, I'm involved in this business with you guys, and I appreciate that, and looking for other opportunities.
As are we.
As are you. Yeah.
Always.
I'm learning to play the piano.
There you go.
So,
How's that going?
it's going. I don't think I'm going to do any recitals, but we'll see. We'll see.
Man, the discipline to just stick with that is intense.
Right.
Very hard.
I've done a couple trips. I've done some backcountry hiking and backpacking. I'm doing some biking, but for the most part, I mean, I think life's about purpose. And you got different phases in your life, and those change for different people at different times. And I think that purpose will come if you have your eyes open and you're looking for it, wherever that might be. Right. So I'm open.
Isaac, thank you for doing this. Thanks for
Thank
sharing.
you guys. Appreciate what you've done.
Very much appreciate
Looking forward to the next one.
Yeah, absolutely.
Not the next video, the next deal.
That's right.